We talk a lot about North American stocks, but have you seen what's happening overseas? International stocks have outperformed many markets so far this year. Coming up, we'll explain why, and we'll explore what Bloomberg Intelligence is watching in the second half. So let's dive in to this week's market moves. Now, quick note before we start, markets can be bumpy. You've probably heard all the questions being raised about inflation, tariffs, oil prices. And yet, even with those global uncertainties, global stocks have really stood out. Here's the quick recap. Two things really drove international markets in the first half of the year. One, valuations. For years, U.S. stocks traded at a big premium to the rest of the world. Many investors viewed that valuation gap as increasingly significant. And two, the AI trade started broadening out. AI has largely been a U.S. story, names like NVIDIA, Microsoft, Meta, but a lot of the AI supply chain lives outside the U.S. Korean and Taiwanese chip makers, European semiconductor equipment players, Japanese chip testing. Well, investors have started paying attention to all of it. So that's how we got here. The next question is, can it keep going? Well, analysts at Bloomberg's research unit, Bloomberg Intelligence, just laid out 3 keys for global stocks in the second half of 2026. Number 1, earnings. Bloomberg Intelligence notes that global earnings expectations continue to move higher, led by technology and energy. Good earnings can influence stock performance. Okay, number 2, valuations. Bloomberg Intelligence also flagged that international equities trade at a wider than average discount to the US. So even after a strong first half, some investors may view international stocks as attractive from a valuation perspective. And number 3, AI leadership broadening. Bloomberg Intelligence expects AI leadership to keep expanding across regions and sectors, which could bring even more of the world into the trade. So how do investors gain exposure to the world? Well, this is not financial advice, but there are a couple of ways investors can gain diversified exposure. First, let's zero in on developed markets outside the US. Think Europe, Japan, the UK, places investors call the EAFE region. One option is Global X's MSCI EAFE Index ETF, ticker EAFX. It holds more than 750 companies across 21 developed markets outside the US and Canada. Then there's the emerging market story. Think Korea, Taiwan, India, Saudi Arabia. For that, Global X offers Global X MSCI Emerging Markets Index ETF, ticker EMMX. 2 very different exposures for 2 very different parts of the world. For more on some of the biggest opportunities in global markets, be sure to check out the Insights section of globalx.ca.